Good morning. This is Ron Brown. I have promised that I would do some videos on my daily analysis process, and I'm going to begin those videos today. This is the 28th of September 2023, and my videos are going to be about market analysis, how I use HDSI and Thinkorswim for that, and it's just my whole daily process of going top down. This is really about the techniques to determine the underlying state of the market and where I should focus my attention, both for the long and the short side. And just remember this, the market is your teacher. That's where you learn. You learn by observing the market, and not so much by listening to what everybody else is saying when they're selling their commercial products. It's all out there for us to see. Okay, the first thing I'm going to start out with is broad market analysis. Approximately 60% of a stock's movement is determined by the broader market. I use my market analysis user groups to get a feel for what is happening, and after this slide, I'm going to take you into those groups. I look at the major market indexes, the ETFs and ETNs, and HDSI generated indexes. Of course, I have to point out part of the standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All those trading decisions are made by you. All trading strategies are used at your own risk. So if I point something out, it's going to be dated by the time you watch this video. And you should concentrate more on the techniques rather than any specific stock or ETF that I mentioned. When I begin my day, I open the designer. I go to my user groups. I go to my market analysis user groups, and these are groups that I put together over the years. I click on the first folder, Major Markets Plus, which includes a few ETFs, just so I can get a quick read on the market. But then I'll go down to my major ETFs and ETNs, and then I'll go down to the broad market indices. But I can also look at an expanded view of the broad market indices, the sectors, the HDSI sectors by industry, and then the industries, and then the spiders, and so on. So it just depends on how much time you want to spend doing this. I'm going to click through to this, and this is down here at the bottom. I sort on raw combo, and I look at this because I want to see where the strength and the weakness is. And by sorting on raw combo, you can see that the combo rank is a percentage price change one day. Now, if you're new to HDSI, you need to know that a filter is attached to this view, and also what's called a combo ranking, where you can specify the fields, and the only field in here is a percentage price change one day. So when this view comes up, I know that the index on top had the greatest gain for yesterday. There are two of them tied, small cap and the semiconductors. Now, as I look further across here, I'll put this down here so this is more visible. First of all, I'll start over here. I'll see that the VPA volume was above average for the S&P 600. The spread was below average, and the close was mid. This has been negative on the downside since the 3 crossed the 6. 17 days, zero's the crossover day. So it's been down 17 days. So I'm just going to bring up a chart, and this is what I call my 2C chart, and you can see where the 3 crossed the 6 to the downside, and that would be 17 days ago. And it really has not looked back. That's when this market really started to weaken. As far as the days since the volume point of control turned negative, that is 8 days ago. And that's right down here. It was positive for one day. This is a very sensitive indicator. It was positive for 1 or 2 days, and then it turned negative again. You can see that the 3 and the 6 started to move back together. So you can see it right here, and then it failed again. But I can tell immediately that this has been going on for quite some time. Now, the semiconductor doesn't have volume, so there's no volume point of control here. But if I look across here, and I'm going to go back up to the prior line on the small cap, I can see it was up 1% yesterday, but since the beginning of the week, which is Monday morning, only up 0.3. Over 5 days down minus 1.8, over 21 days down minus 5. Only down 1% from the beginning of the year. So the past 21 days have been some of the weakest days, and you can see that right up here. Now, if I go down to the SOX, notice that there is no volume on the SOX indicator. It gives me the spread and the close, and this tells me that it has been negative for 15 days on the 3 crossing the 6. On the VPOC, there's going to be this huge number, which means nothing because there's no volume. But if I bring this up, you can see that the semiconductors or the SOX went negative back here, and it's remained negative all of that time. Now I'm talking, of course, which is going to slow everything down. Let me just drop this up here into that window. But I can do this in just a few minutes. I see where the money flowed yesterday, and I can tell if the market has been negative and for how long, and what has been positive. Now there is a positive here. It's the Ultra VIX, or the UVXY, and it's been positive for 6 days, both on the VPOC and on the VPOC and the 3 crossing the 6. So when the market gets in trouble, the UVVX will be going up while the markets are going down. Now, when I make a statement like that, I'm generalizing. That's generally the case, but you should know that. So this is going to work inversely to what the market's doing. And just looking at this, I'm not too excited about putting capital to work in the market on the long side. Now I want to move this down here in this window, and I'm going to open up another chart here. And it's going to be a weekly chart, and I'll drop it into this window on my Samsung monitor. Now, by bringing a weekly chart up, I can really put this into perspective. You can see that the UVXY has been going down for a long time. It's near the bottom. There just hasn't been a lot of fear in this market until it started coming in recently. And notice how the volume has picked up on this weekly chart. Now, I want to go back up to look at the semiconductors. And even though there is no volume on this chart, we can look at the weekly and see that this index had done quite well for quite some time, but it's been in a chop since this week here, which is back in June. If you look here, down here at the warehouse view, you can see that this index is still up 32.8% since the beginning of the year. So it's had a really good year. It's just that a lot of profits have been given back in recent weeks. Now, if I want to know how far down this is, there's a couple of ways I can do this. I can scroll all the way over to the right with this warehouse view, and it tells me it's down 13.3% from its 52-week high. So that's quite a bit, but it's still, since the beginning of the year, is up 32.8%. Another way you can look at this is to open your quick pick on your charts, and you can go to market charts up here, open that up, and you scroll down to the number 9 chart down from the high. And here's a percent down from the high over the last 250 days. And if you look right here at this, let me bring up this number right here. It gives you the same number, down 13.3%. Now, this can be applied to any of these indexes. Let's just go down to the S&P 1500 here. I need to go back over here and activate my mouse or my pointer. And here's the S&P 1500. I could either look at the warehouse view, or I can look right here and see that it's down 7.4% from its 52-week high. Okay, now I'm going to go look at the NASDAQ. This is what I do every morning when I send out that email, and I'm going to look at the version with the AD line, and it's over. Happens to be over here in this window, and this is what I'm looking at every day. If I use my alternate I key, this information window comes up. Now I need to get up to my NASDAQ composite. The information window comes up, and I scroll down to the bottom so I can look at the internals. This is from yesterday, the advancers versus the decliners. It was a positive day for the internals, but it was really kind of a nothing day also. New lows compared to new highs. I look at that. I look at the direction of the AD line, and then I look at this information over here. I can see that the long-term trends down, mediums down, short is down, and I can see that there's a VPA flag from yesterday, which shows that strength was coming in. And you can see that right here. And the reason this fired is because the market opened here where this arrow is, traded all the way down here, came back up to close in the upper 2/3 of the daily range. So that's why it says that strength is coming in. And really, the internals were not terrible yesterday. Now this tells me nothing about where the real strength was, and that comes later. And that's the advantage of using this program. Yes, it's required to be on a computer. You have to download and update, but the output, when you really know what you're looking at, it is unlike any other software program out there. The information that I and you can get out of this program. So my conclusion right now, after looking at this chart and looking at this information down here in the warehouse view, is that we're still in a weak market, but we're getting some signs of strength. And that's good. And as I'm doing this today, the market's up slightly. What is going on in Washington with the probably a shutdown of the government, that's weighing heavily on the market, as are interest rates. Now let's move on. I'm going to move on. I'm not going to spend any more time on this, but you can see that on these views, you have the option. I'm just going to drop back down here. The option of here's what I want. Getting a quick read on the market over the past 21 days and since the beginning of the year. And if we look at the yearly, it hasn't been a bad year, but right now it's a very tough trading environment on the long side, just looking at the broader market. But of course, there are strong sectors, and that'll all be coming into play as I work through these videos. Now, the next thing I'm going to do is I'm just going to drop down to the major markets, ETFs and ETNs, and I'll make this bigger. And what do we have here? We have the oil fund. U.S. oil fund was up another 2.5% yesterday. And look at these numbers across here. Over since the beginning of the year, up 18.2%, and 14.5% of that was up just in the past 21 days or the past month, essentially. These are trading days. So where did this run begin based on the 3-6 crossover? It began 22 days ago. If I look at this, yesterday volume was high, the spread was below average, the close was mid. If I bring up this chart, these charts, you can see going back here, this is where the crossover occurred. Let's make this full screen. Looks like it occurred right there at 3 crossing the 6. Before that, it was clear back here, had a nice run, slight pullback here for a few days, and then money flowed right back in to the oil. The volume point of control turned positive on the same day. It was negative for a couple of days. About 3 or 4 days here, positive for one day. You can see how sensitive this indicator is. Then it turned positive again. So when you see the volume point of control going positive, and along with the 3 and the 6, that's generally a good buy sign. And conversely, when you see them going negative, that's generally a decent sell sign. Let's go up here and take a look at this. Well, this didn't go negative. This got so extended, it took a while for the 3 to cross the 6, but it happened right here, and the VPOC was already positive. So the VPOC, it's a squirrely indicator. It is very sensitive. It'll turn first, and then that'll give you some warning about what may happen with the 3 crossing the 6. But in this chop area here, you can see, look at it. It crossed over right there for one day, but generally it was down. This is impossible to trade in here. When you get a break like this, here you can see pocket pivots coming in, the blue lines, the 3 crossing the 6, and the VPOC already positive. So what do I know here? I know that oil has been going up, as we've seen with the gas prices. Natural gas had a good day yesterday, but over multiple days it hasn't been that strong, so it may or may not continue. Russell, what's this one down here? That's the dollar. The dollar's been really strong. See the green all the way across here? This is where this warehouse view really shines, because I can see immediately where the strength has been and where, if it's continuing or not. Now here's the dollar as represented by the USO. Had this shakeout one day, and then it turned around and went right back up again. All this information in the warehouse views, and I actually look at it on a different resolution where I get more information. I've made this a little bit larger so it's easier for you to watch in the videos, but most of this information is visible on my screen. Not all of it, but most of it. Anyway, let's look back here. What's this 20-year? The TFB, this is a short 20-year, which has been positive, while the TLT is inverse to that. It's been going down over the past, since the beginning of the year, it's down 11.2%. And if I go up here and look at the short side, you can see that it's up 11.2%. So you can either be long or short with these ETFs, but I have a quick read on what's going on in the markets, both with the major market indexes and the ETFs, just by using these 2 different folders. And with this information over here, I can see if these are emerging trends, either up or down, or if they're trends that have been going for a long time. If I see multiple days of green, like on this commodity index, it tells me it's been going up for several days. Now tell me, where else do you get this information like this? I don't know of any place. So this is why I love using HGSI. And even though it has to be downloaded and updated, it is a tremendous program for analysis and prospecting. I'm going to finish this video by going down to my broad market indices. Now these are indices that are generated by HGSI. And the way I'm set up is if you go under Preferences, Global Index Options, I use 104 weeks or 2 years because I want to see an index that's 2 years long, not just 1 year. I use market value weighted index rather than equal dollar weighted because I want to give more emphasis to the larger caps. Now I'm going to cancel this, and then I'm going to just take a look at some of these. I'll use the S&P 1500 as my example, but the first thing I want to do is I'm going to open this up, and you'll see a folder called HGSI Index Charts. And I think I'll make this another one of these HGSI Index Charts. This one I'm just going to leave up. And this is chart under HGSI Index Charts. This one is going to be chart number 8 over here. So let's just look at the broader market, the S&P 1500 index, which includes the large cap, the small cap, and the mid caps, the S&P 600, 400, and 500. They're all in here. If you want to just look at the larger caps, look at the 500. But as an illustration, I'm just going to look at the S&P 1500. And as I go across here, you can see yesterday the volume was less than average. The spread was above average, and it closed in the mid. And if you look over here, you can see that. I'll get rid of the crossover. Now what we have up here, and I'm going to get an arrow here and change it to yellow. First of all, this is the accumulation distribution bar. It went from E to D, so it improved a little bit. This is A distribution, and this is A accumulation. The distribution went down a little bit. Now this is A plus B distribution, and this is A plus B accumulation. And even though there is a strength seen returning sign in here, there just wasn't much movement yesterday. Now looking over here, make this a little bit larger. I'll go back to my arrow. You can see yesterday on the percent advancers was 58% compared to 40%. So 850 to 560. I don't have the unchanged in here, but the advanced decline line was 1.45 to 1. So pretty decent day on the internals. Look at the 52-week highs, 0.96 compared to 8.6 on the 52-week lows. And highs minus lows 112. And then just a percent above these moving averages, accumulation A, B, C, D, and E. You can see the percentages. AD direction was up yesterday. It's D accumulation. Everything's pretty negative here, though. This is the AD line. You can see it started to turn up a little bit yesterday, and we did get a volume pocket pivot yesterday. So there are some signs of slowing down and some accumulation. I'm just going to stay on the S&P 1500, and we're going to go through these charts. So this is number 1. Here's the next chart. You can see the actual movement of accumulation. The D's are going up as the E's come down. Not much movement in the C's or the B's or the A's. This is accumulation distribution using the Chaikin indicator. You can see it's well below the zero line. Maybe just a little hint of accumulation, not much as of yesterday. This says a different view of the advancing issues versus the declining issues. That information's in this chart too. You can see a little turn up yesterday, strength coming in. Chart number 5, this is a percentage of stocks above their 20, 30, 50, and 200-day moving average. As you can see, these are all well below their 50-day moving average line, but there was a little tick up yesterday on 3 of the 4. So some signs, slight signs of accumulation. Potential buy sell. Now when you have red bars like this solid all the way down, those are sell signals. This is a light sell signal after a buy signal or reversal in one day, and then we've had confirming sell signals. This is the same chart, but without the moving averages. The other one has the 18, 50, 100, and 200 days, so I can see the relationship of the price to the moving averages. Okay, I just did that one already. This is just another view, the advanced decline line going down, the percentage of the stocks above their 50-day moving average. Going down, but an uptick yesterday. Same thing. Well, this is a chart I've got over here, but okay, so number 9. Let me get back to my... This shows the force index, the 13 and the 2. Yesterday, you can see that the force from the prior day, which would have been Tuesday, came off, which corresponds with getting a strength scene returning. This is a McClellan oscillator. And if you right mouse click, edit the current view, this tells you it's an index breadth indicator computed from the difference of the 19-day EMA and the 39-day EMA. When it gets extremely oversold, it gets down in this area. This is another reason I do 2 years. I get a longer look at this. You can see that some of the selling pressure is coming off of the market because this low didn't get anywhere close to this low, and it's turned back up. And then finally, this shows the different stages of the market when everything is down as far as the trends. Down, 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 it's going to be bright red. If you scroll to different parts of this, right here, it'll show you what the trends were at that time. Also, these bars here represent when there's accumulation and when there's distribution. Obviously, green is for accumulation and red is for distribution. I'm not seeing really any accumulation yet. As I've been talking, maybe there's been some good news on the budget. The futures have gone from flat to up 3/4 of a point, so there may be some good news. Anyway, this ends this video. I just wanted to give you a feel for how I look at these markets. Now, I can go through this in 10 minutes, and I can look at what indexes are performing and what are not, and this is very helpful in here, showing me where strength may be emerging in these groups, and then I can go top down from here if I want to, and I'll cover that as I get into other videos. Thank you for listening.